Order, order. I now call Andrew George.
Thank you, Mrs. Riordan, and it's a great pleasure to have secured this important debate. And I have to say this is one which has been pressing many businesses in my constituency, and I know that it's been raised on a number of occasions, indeed by myself and others in the House, because of the concern of the change of relationship between businesses and what used to be trusted advisors and supporters in the banks. And I think that now that relationship has, I hope not irrevocably, but I think many fear irrevocably changed because of the nature of the way in which banks have treated small businesses in recent years. Banks should be business friendly, but the evidence is that they've behaved like parasites, I'm afraid, engaged in sharp practice, mis-selling complex interest rate hedging products or hidden swaps, which they will have known were massively to the detriment of the small businesses that they have flogged them to. Instead of doing what small businesses do well, which is what we in the government, the government and those on the government benches, I should say, and those who support the government, want businesses to do, which is to grow the economy and create jobs. Thousands of small businesses have been held back and others put out of business altogether. But being put out of business actually suits the banks in these circumstances, because every company which they lend to, which they can drive into administration, has assets which they can sell and becomes a company that conveniently cannot seek redress from the bank, particularly in the current climate. I will briefly, yes.
I thank my friend for giving way, congratulate him on securing this debate. In his analysis of this problem, is he of the view that the banks were quite clearly targeting specific businesses, asset-rich businesses? Because my experience in my constituency, the hotel sector, people owning property management companies, and above all else the farming sector, were really hardly hit, particularly in the sales of unregulated tailored business loans.
Well, my honourable friend makes a very acute point there, because, of course, it does seem to me that in many of the occasions when I've seen, or the many cases which I've taken up, and no doubt in his constituency the same, that there do appear to be underlying the business loan, these rather dodgy business loan, and of course the swap agreements which are embedded in them, and that's the critical thing. There do appear to be very significant assets underlying within the businesses themselves, and no doubt that will have guided the banks as to which businesses that they might have offered the loans to. What I want to cover today, and I've given my honourable friend some advance notice, at least on the kind of areas that I'll be covering, and in particular, I would like to ask her how the Financial Conduct Authority can justify the exclusion of at least a third of the companies that were being looked at and which have been missold these products because they are deemed by the FCA sophisticated. And I wondered what in my view, arbitrary basis that is and how that can be challenged. What view the government takes with regard to the reasonable claims, in my view, by companies, these companies for which the mis-selling of these products has caused detriment, that they should seek redress for consequential loss. It is suggested that some banks are seeking to reinterpret the law in this area so that it makes it difficult for those companies to pursue the issue of consequential loss. What happens to those businesses which were effectively forced into administration liquidation by this mis-selling? At present, they appear to have no redress at all. Surely that cannot be right, and I hope that the government will be encouraging the FCA at least to have that matter looked at again. Does the FCA review and redress? Does the FCA review and redress process take into account or exclude the matter of ongoing facilities through the banks, the ongoing facilities which are made available through the banks? And will the government now authorise an inquiry into the sale of all hidden swaps, that is the tailored business loans, the embedded swaps and so on, sold to to SMEs by the banks since about 2001 is when this pattern of activity was identified. And finally, what assistance is there for entrepreneurs who are trying to secure a mortgage? This is a separate but no doubt related point. It's trying to secure a mortgage or even complete a rent check for a home now that the self-certification system has been scrapped. There are many small businesses, particularly new businesses, which are starting up, and we want to encourage people in those businesses, but cannot secure a loan in order to advance their business. I fully appreciate that the government has actually made some very significant strides in recent years in terms of the establishment of the business bank, the enterprise finance guarantee system, the enterprise capital funds, funding for lending, the growth accelerator, and many other initiatives which I think have been significant and very helpful to the business sector. And I certainly hope that those will prove to be a success in the months and years ahead. But we still have, and my primary focus today is we still have a difficulty, a legacy of a problem, and I hope that something which will be erased from the business lending environment, one which I hope the FCA will complete their review process and make sure that the banks that are engaged in these rather shoddy practices are brought to book as quickly as possible, and that those companies that have suffered detriment resolve their redress as quickly as possible. I probably need to, because of course I come at it from my own constituency inevitably, need to sort of draw or paint a picture of the West Cornwall and Isles of Scilly constituency of St Ives. And not only is, of course, it the most attractive constituency in the country, but it also has a large number of very, very small businesses. There are no major companies. There are no car plants, refineries, major manufacturers, head offices of multinational companies, as there are in many other constituencies. It is predominantly about 7,000, depending on how you define what a small business is, certainly including sole traders and medium-sized enterprises. About 7,000 enterprises in the constituencies, and of course they're multifaceted and multi-talented. I mean, not only do they throw pots and manage satellites in some cases and engage in basket weaving and engage in international website design, hoteliers, caterers, bakers, farmers, fishermen, fishmongers, and often, of course, in order to be successful in business, they have to have many other talents as well as to work extremely hard, including marketing, customer care, bookkeeping, IT skills, and other skills. But few of them are financially sophisticated, and most assume that they, or used to assume that they could trust the bank that they've loyally been a customer of, in many cases, for decades before they were missold these products. I mean, surely banks are there to help, aren't they? Banks have a shared interest in businesses succeeding, don't they? I mean, surely they wouldn't engage in sharp practice or sell them something that they knew that small business would regret. But I'm afraid to say, in the cases that I have seen, and I know that many other members have seen as well, this is simply not the case. And the banking sector have seriously let down small businesses and have completely demolished any of the trust that used to be fundamental in terms of the relationship between small businesses and their banks. I mean, would these banks do the same to Tesco's, BP, or Unilever? No, of course they wouldn't. We know that they wouldn't. They're simply taking advantage of small businesses because they know that they haven't got the sophistication, that they can run rings around them, and they can bully them into the kind of agreements which have put many of these businesses, some cases out of business, and in many cases struggling to maintain their survival. Like many MPs, I've taken up many cases, and my eyes have been opened by the shady dealing. I mean, if you take Colin Phillips of the Coasters Tea Shop in St Ives, which was recently put out of of business by this practice, saw his business sold underneath him without any consultation after he'd been missold a loan by Clydesdale Bank over 5 years ago. There are many others which I could name, and others which I can't name, which have been devastated and damaged by the banks in this way. One company, Sea Salt Limited, which employs 300 people now, it started in the constituency in Penzance in 1981 by Don Chadwick and is now run by his three sons, Lee, David and Neil. It's a very successful company, a UK company. Its clothing is certified by the Soil Association, the first ever. It's won the Queen's Award for Sustainable Development, the first fashion company to do so, and has been very successful, won many awards, and is growing, but could have grown a great deal more. Sea Salt entered into a 5-year interest rate swap agreement for £805,000 in April 2008 with HSBC. I'm told by Lee Chadwick that they didn't have a choice about the swap. It was a condition of the loan that they take the interest rate protection. The bank failed to make proper inquiries to ascertain their level of knowledge or understanding of the risk inherent in the interest rate swap agreement. They were led to believe that the interest rates were going to rise, although they'd never previously taken a fixed-rate loan. They were wrongly thought that HSBC was their trusted banking partner for 17 years, was acting in their mutual interest. Otherwise, why would they be making a swap agreement as a condition of a loan? There was significant equity in the business at the time, really making the point that my friend from Ceredigion makes. And the company also had access to additional external funding. The swap agreement was unnecessary, and the bank's motive for making it a condition of the loan was profit, not risk mitigation. The cost of breaking the swap was never explained or illustrated. The bank knew that there was a possibility that the loan could be repaid early, and yet, of course, they made sure that they made it difficult for them to do so, and they even confirmed in writing that there wouldn't be any early prepayment or early termination costs, which was wrong. The bank failed to disclose that the interest rate swap agreement created a contingent liability that would affect the company's credit line. It had a detrimental impact on the company. In spite of complaining in 2012, HSBC have been doing their utmost to fight the claim despite the strength of the case. And whilst the company are preoccupied trying to get proper and just redress, of course they're not focusing on the growing of their business and creating jobs. And it's an appalling waste of money for UK business. Given the fact that the FSA found that 90% of the swaps had been missold. So,
before my old friend, just very quickly, can I make a very quick?
Well, if it's extremely quick.
My old friend gets the nub of the issue affecting businesses that are within the government's redress scheme, and the FCA's redress scheme is very welcome and has led to resolution in some cases. But I've got constituents who have been waiting over a year now to have resolution. As he says, putting a huge amount of pressure on their businesses, let alone the TBL, the embedded swap products, which aren't being considered yet at all.
No. Well, I'm sure the Minister heard my honourable friend's comment, and I'm sure she'll take that into account in her response. But the fact is that in the case of Sea Salt, they're still waiting for their interest rate swap issue to be resolved over 21 months since it was lodged as a complaint. And HSBC have done their best to at first resist and then to slow down the redress process, although it will now be reviewed, or they're told it's going to be reviewed by the end of next month. But the fact is that it has unquestionably cost thousands of jobs. In the case of Sea Salt alone, they've estimated that the cost to them is 20 jobs which they could have created if it were not for the impact that this swap has had on a company of that size. And we're not talking about a very large company here. And Lee Chadwick not unreasonably asked, when will criminal proceedings ever be brought. I mean, the Tomlinson inquiry suggested actually in some cases that this should be a criminal matter. When will criminal proceedings be brought against bankers who have perpetrated this fraud? He also makes the not unreasonable point that you need to relate this to the issue of bankers' bonuses. I mean, the fact is he fails to understand how a business, particularly a taxpayer-funded business after all, can continue to pay huge bonuses when it is making losses. And he says, and I quote, "I'm sure that our bank would balk at renewing Sea Salt's facilities if we made a loss and started paying ourselves huge bonuses in the process." So in terms of the re-establishing a decent relationship between businesses and banks, that's an issue which I fear may have irrevocably changed. And certainly Sea Salt are asking the question that from a bank being a trusted advisor of SMEs, they're now, if you like, being the relationship is like an untrustworthy supplier, and it really is something which I think the government needs to look at and look at whether the financial regulation, the FCA and other regulating authorities have to look at this whole question of whether the regulations themselves need to be significantly stepped up. I mean, what is the government doing to stop banks sidestepping the EU bonus caps? What steps are the government taking to increase the power of the SCO and ensure that it acts in the best interests of SMEs and customers and not the service providers? There are many other cases which I could give to my honourable friend, but I know that she needs time to respond. I did mention, as she knows, the issue of the difficulty which I know that many small businesses face in my constituency, particularly new businesses, because of the removal of the self-certification scheme for those that are seeking a mortgage. And it does seem to be wrong that there are circumstances where actually the businesses themselves that are employing people are unable to get a mortgage, but their employees can. And I think that is something which I also hope that the Minister will look at as well. The relationship is one which is clearly broken down. The banks have behaved very irresponsibly, sharp practice, like parasites on these small businesses, and I really do hope that the government will take this bull by the horns and make sure that the FCA drives this review process and that we get satisfaction for our small businesses.
Minister.
Thank you very much indeed, Mr. Riordan. It's a pleasure to serve under your chairmanship this afternoon, and can I thank the Honourable Member for St Ives for the debate this afternoon. I'm very grateful to have the opportunity to discuss what is actually a very important issue, as he mentioned, and I know is of great concern to a number of Honourable Members across the House, given previous debates that have happened on this subject. He mentioned towards the end of his speech, the wider issue of the relationship between banks and customers. And I hope you will understand that if I don't go and tackle that broader subject, it's purely because I've only got 12 minutes left to deal with the subjects that he has raised. But I'm sure that he will be able to come back and apply for a further debate in this chamber to explore those themes. But I have taken note of what he has said. He has made a very strong case on behalf of all those businesses in his constituency and others that have suffered from mis-selling. He mentioned the 7,000 small enterprises in his constituency, and I'd like to begin by offering him the reassurance that from the very beginning this government has been clear that the mis-selling of financial products is unacceptable. We take extremely seriously the abuse that has taken place, and we are determined that any wrongs that have been inflicted on businesses should be righted. As all members will be aware, the Financial Conduct Authority review process was the subject of a backbench debate on the 24th of October last year, which focused in particular on the speed at which the review was taking place, and the Honourable Member has mentioned that in relation to one of his constituent companies in particular. As my colleague, the Financial Secretary, noted that day, whilst the Government shared the disappointment at the progress that had been made at that point, we were confident that the review process would provide the correct level of redress for affected businesses. I'm pleased to say that considerable progress has been made over the intervening 5 months. All cases are now under review, and almost £500 million has now been paid to over 3,400 small and medium-sized enterprises. I hope honourable members will agree that this is positive news and shows that the review is working. It's worth noting that the majority of banks in the review will also now make an initial redress payment to businesses and then discuss consequential losses separately. And I'll come back to consequential loss in a moment. The honourable gentleman mentioned it. And that this will help those small businesses that have been on the wrong end of mis-selling to get back the money that they badly need. And I know from my own constituencies, companies that have approached me, the desire for cash and the importance of cash flow is tremendously important and something that's been mentioned to me. The FCA has now published each bank's projections for when they expect to finish the review process. All banks are expected to finish the review by June 2014, so the month after next, with a number likely to finish before this date. And I can assure the honourable member that Treasury ministers and officials will continue to track progress against those projections very closely. The honourable member voiced concerns about the large number of businesses that have been assessed as sophisticated and therefore fall outside the scheme. The government has been absolutely clear that where a business lacked the necessary skills and knowledge to fully understand the risks of these products, then they should receive the appropriate redress. However, as my colleague the Financial Secretary made clear last year, we don't agree that all businesses should have access to the review. There does need to be a defined cut-off point where more sophisticated businesses take responsibility for understanding the products they are, or in this case they were, purchasing. And there will have been organisations that took one of those products with a full understanding of the risks involved if interest rates fell. And it isn't for the government to perform due diligence for such larger, sophisticated businesses. Any such action would weaken incentives for businesses to act sensibly when purchasing financial instruments, and I would certainly be concerned that we could potentially open the floodgates to any business that lost out from a financial transaction. Very briefly, yes.
For her comment on that, but of course, will there be an opportunity for appeal for those businesses? Because of course there will be circumstances in which those businesses can show that this unregulated area of financial product was one which was missold, that they were misled by the way in which the banks had actually sold the product to them in the first place.
Minister.
Well, as I understand it, the FCA has actually amended in the course of the last few months the sophistication test. They started off with a very broad test under the Companies Act, and then that has been refined down. And I do know from my constituent case that it is possible to ask the FCA to reconsider whether in fact a business should be deemed to be sophisticated, although obviously ultimately it is a question that the FCA will make a judgment on, but it is possible for there to be some pushback, and there does need to be a defined cut-off point so that the right businesses are within the scope of the review. I reiterate that the government, I've already said, takes extremely seriously the abuse that has taken place in very many cases, and we are determined that any wrongs that have been inflicted on businesses should be put right. I want to see a quick solution to the mis-selling of interest rate hedging products to allow these businesses to continue to operate and contribute to the ongoing recovery of the UK economy. Now let me turn to the questions the honourable member specifically asked. If I don't get to the end of them, then I, or I'm sure my colleague the Financial Secretary, will write. He asked about consequential loss and whether some banks, I think he mentioned, are seeking to reinterpret the law on this. Banks, of course, are required, where there is mis-selling, to provide fair and reasonable redress. And that means putting the customer back in the position they would have been in had the regulatory failings not occurred, including any consequential loss, and the FCA has published guidance on consequential loss. He asked about what happens to businesses who are effectively forced into administration or liquidation by mis-selling. My understanding is the FCA has confirmed that in that case the administrator will take part in the review on behalf of the business, and the directors of the business will be given plenty of opportunity to put their case across regarding the sale of the hedging product. He asked about the matter of ongoing facilities, and I think I will have to write to him on that point because it is something that we would need to check. And I will come back at the end to the self-certification regime because it is something slightly outside the scope of the debate, because I wanted to particularly turn to the... Well, very quickly.
To the Minister for once again giving way, but on the issue of those companies that go into administration, of course the administrator is often, in many cases, actually acting on behalf of the creditors, including the bank. So I can't see how the administrator can in any sense represent the interests of the company which is seeking redress.
Minister.
Well, actually, that's a very interesting point that the honourable gentleman, the honourable member, has raised. I mean, at the end of the day, they are there to get a fair deal for everybody as possible. And as I said, the directors of the business are given the opportunity to put across to the FCA their case regarding the sale of the hedging product. So the directors of the business, even if the business gone to administration, the directors will be able to put across the case. So whilst the administrator, as he says, is acting, in most cases, in my experience, my business experience, administrators acting on the behalf of trying to get as much back for the business, the creditors, as they possibly can. Let me just turn very briefly to the matter of embedded loans and hidden swaps, which was raised by the honourable member and also the honourable member for Carrow-Gideon. The honourable member raised the difficulties that his constituent in particular, he mentioned Mr Phillips and the Coasters company has faced in relation to a fixed-rate loan, and I'm very sorry to hear about the problems that's caused. It is, as I think the honourable member for Carrow-Gideon said, the FCA does not have regulatory powers over business loans, and as a result, the FCA's supervised review can only cover interest rate hedging products that were agreed separately to a business loan. However, the honourable members may be interested to hear that the Treasury has secured a voluntary agreement through the British Bankers Association that going forward, banks will provide the same level of disclosure of features for fixed-rate loans, such as break costs, as for regulated interest rate hedging products. And most importantly, the banks will now ensure that break costs are fully explained and worked examples are provided. Let me just turn to the matter of self-certification. The honourable member asked about assistance for entrepreneurs who are trying to secure a mortgage. The Financial Services Authority conducts a wholesale review of mortgage regulation in the UK, the Mortgage Market Review, which was published in October 2012, and the rules are to be implemented by the FCA later this month, before the end of the month. And as a result, lenders will not be able to offer self-certified with fast-track mortgages from the 26th of April. However, the FCA recognises that lenders should have flexibility to decide what type of evidence of income they can accept from self-employed customers. So it is going to be a decision for individual lenders to decide on the evidence that they will require as proof of income. I'm sure the honourable will appreciate that all of this has been the new rules have been brought in within the context of wanting, obviously, to make sure that we have stronger mortgage lending practices to avoid the issues and the problems that we've seen in the past, where people have perhaps borrowed more than they should have done, which then causes a general problem. If I could move on just to the sort of lending to small businesses, as the honourable member mentioned, the government is determined to support small businesses and to improve access to finance. First, the Funding for Lending scheme has provided incentives for banks and building societies to boost their lending to the real economy, and since the Funding for Lending scheme was introduced, bank funding costs have fallen to historic lows. Secondly, small businesses need to have confidence, and I think the honourable member very much talked about this, the issue of confidence between smaller businesses or businesses of any size and their banks. And that's why the major high street banks have put in place an independent appeals process which allows any business with a turnover of up to £25 million, which has declined any form of lending, to appeal that decision for any reason to the participating bank concerned. Results show that in the 2 years the appeals process has been running, in 40% of cases where a decline was appealed against, a lending agreement with which both parties were satisfied was subsequently reached. And the government also announced in the budget that the first results of a major new survey into the way banks perform for small businesses will be published by the Federation of Small Businesses and the British Chambers of Commerce in May this year, next month. Banks will be able to use the results to measure their progress towards becoming better banks for small businesses everywhere. This is something the government is very focused on. The government welcomes this and wants to provide UK small businesses with a clear and credible way to judge how their bank compares to its competitors. And we want Britain's banks to do more to put Britain's small businesses at the top of their priority list. Third, the honourable members may be aware the government announced a package of measures designed to improve competition in the SME lending market. This includes the announcement that it would consult on proposals to require banks to share more information on their SME customers with other lenders through credit reference agencies, levelling the playing field for challenger and non-bank lenders. And finally, the government also announced in the budget last month it would consult on whether to legislate to require SME lenders to release details on businesses they reject for a loan so that alternative providers can discuss other options with them. I'm wary of the time, so let me conclude then. I'd like to thank the honourable member for bringing this important issue to the House today, and I'd like to assure him that once more this is an issue which continues to receive the highest level of attention from the Treasury and from government ministers as a whole.
The question is that the sitting be now adjourned. Order, order.